Folks, I'm going to tell you 5 quick facts about black bull markets. Now, did you know, number 1, they're New Zealand FMA regulated. Number 2, did you know they have a copy trading service where you can either be a signal provider or copy signals? And number 3, did you know they've got over 26,000 tradable assets, including Forex, crypto, stocks, indices, and even more? And number 4, did you know they offer 500 to 1 leverage? And number 5, if you open up an account today and trade 1 lot a month, they're going to give you TradingView Pro for free. Check them out, Black Bull Markets.
Good morning. Good morning.
Good morning, everyone.
What's up, Arturo? Happy Wednesday. Shoot, let me go get my mic and go plug it in.
Right. For those of you you guys know the drill. Drop your locations, drop any pairs you guys are looking at. Good morning. Good morning. Good to have you on. All right, we got Canada, we got Nigeria, we got Sweden, we got Texas. Nice. Euro USD, GBP USD, SPX, US 30. All right, we got Qatar. Very nice. England. Good to have you guys on this morning.
Did you say Qatar?
Is that not how it's pronounced?
I don't know if I've ever heard it pronounced Qatar, but maybe Qatar or Qatar.
Madrid, NZD, and CAD. Nice. South Africa, we got gold. Good deal. We'll give it like a couple more minutes. I really don't have much at all for you guys today, to be honest with you. In the past few months, as I'm sure you probably know, markets just have not produced the setups that we like to see. Just, part of being involved in the market, you just have to be able to sit on your hands. Not every day or every week's a trading week.
Yeah, I've had very, very low volatility and not clean wave play. And it just happens from time to time. Given the fact that we've had the low volatility to start off the year, Q1, Q2, I would imagine we'd have a pretty volatile Q3, Q4, especially with what's going on in the world, with rising interest rates, potential recessions come late this year, early next year. So I feel like we're gearing up for that.
Yep.
So just be patient, guys. Just think in the long term, right? Just because the first half of the year is slow doesn't mean the second half is going to be slow. It's because you only made, 2% a month the first half of the year doesn't mean it's going to be the same. And it's all different. You just got to put everything together in the long term.
Mm-hmm. We have Atlanta, ACJPY, GBPUSD. We got Kenya, Euro USD. What's going on, Chad? Good morning. It must be early for you over there. PST time. All right, well, we'll go ahead and get started. I don't really have too many pairs. Many of the pairs that I'm going to be talking about today, I've already discussed before. I know we have a few new members or new viewers here this morning, so welcome. Just a little bit of a reminder / disclaimer. Of course, nothing I talk about here within this live session has anything to do with signals. It's really just my overall bias and what I would like to see happen with price. At the end of the day, it is your decision. Trade anything that we are showing you. We are not financial advisors. So this is all just for educational purposes. So we'll go ahead and get started here. As always, we only trade Forex pairs. We don't trade commodities, stocks, futures, indices, cryptos, anything of the like. So any questions that you do have in regards to Forex pairs, we'd be more than happy to answer. We'll try to do our best to get through as many questions as we can towards the end. I'm going to share my screen here and we'll get started. All right. Can we see this? Can we hear me? We good?
Yep. Gotcha.
Cool. All right. So we've been talking about AUD/JPY for quite some time now. We know from a higher time frame perspective, we are still extremely bullish, right? We are making higher highs and higher lows. We did come back down and sweep higher time frame equal lows. So sell side liquidity was run out before this lower time frame trend started to occur. We came into 863. So we spiked down into that psychological level. It happens to be the previous swing point, right, on the higher time frame. Now we could come back down to 84.3, but with the current uptrend, I'm still going to be looking to buy until the markets tell me to sell, right? Even though we still are in a counter trend downtrend, that is definitely the case. We have a lot of equal highs. I really don't think this is a high in the market. If we were going to go short overall, I believe we would have taken out that liquidity before continuing lower. So that's why I do think that the market will probably end up continuing long. So whether it be from our higher time frame swing or our lower time frame swing, it's really up in the air at this point. What do I mean by higher time frame swing? Well, this is really the structure on the higher time frame: high, low, high, low, high, right? So all of this is really just one overall pullback of some kind, just consolidation. We haven't made a lower low, we haven't made a higher high. So this is still the range of this market, right? So all of this in here, just because we made a high and a low and a high and a low, and maybe we break this structure here, doesn't mean we're overall bearish. It just means that we may experience some deeper pullback deeper into this range here before continuing long again. All right, because overall we do have a lot of buy side liquidity. We have buy side liquidity resting here, buy side liquidity resting here in the form of that trend line, and then one right in here with this previous resistance. So I am liking further upside, and I did pinpoint two levels of interest that I'm looking to buy from. One we're currently in right now on half risk. The other we're looking to get in at a more of a discounted price if price pushes lower. So within the current lower time frame trend, we have this higher high and higher low sequence, right? So we could, make a high, make a low, make a higher high, make a higher low, and then a higher high to continue with this overall trend, right? So where is the previous range on the lower time frame? Now we just discussed that this was the range on the higher time frame. The range on the lower time frame is currently right in here, right? This is the high that made this low, that we came into this last selling volume, aka that area of demand. We stopped and we made a higher high. So have we made, upon a pullback, have we made another higher high? No. So this is still the range. Just like we haven't made a higher high here. Well, this was the higher high, but we haven't made another higher high after this higher low. So this is why this is still the range on the higher time frame. So that is why I'm looking for the price to react off of this level of demand, our last selling volume in here. We had a lot of sell side liquidity. If you extended a trend line, you would have had 1, 2, 3, 4, 5, 6 touches of this trend line. So again, a lot of sell side liquidity resting below. So I was hoping that we would come back down, sweep that liquidity into this level of demand before continuing long. So that definitely is a possibility. If we do end up breaking and coming lower and hitting our stop here, then I am looking for that overall pullback that we talked about in the higher time frame, more along the lines of this: high, low, high, low, high, into our higher time frame level of demand. And that happens to be down here. Because when price created this low and then this high, we had an overall retracement, right? We accumulated, and this was a lower low in the counter trend, a lower high, a lower low, a lower high. And here we failed to generate that lower low in the market below this swing point, and then we ended up making that higher high. So that would be our last selling volume, aka our demand level. So that is where we're going to be looking for price to pull back into on the higher time frame if we do get a break below sort of this area of demand here. So that's why we have two levels now. Again, for those of you who are new, the reason why we have two levels here instead of just one like this one is because having an entry at that point with a stop below the overall low, which is the most appropriate, would only yield us a 1 to 4.6, which in all reality is not a bad risk to reward. But since this would be more of a swing trade, 1 to 4.6 isn't really the best. Now, it meets my rules, so I would place it. However, what we can do is try to make this a little, better for us in terms of risk to reward. So what we can do is split up our positions half risk each, both of them at the same entry, the same take profit, but different stop losses, because this is the overall low in the market, right? The previous swing point, but this is the low of the demand level, right? So if this is the demand, this is the low of the demand. So what if we just come into, the demand here and then just have a reaction and go long? Well, then we can save ourselves a good chunk of stop loss by putting our stop loss below the demand low instead of the overall low. So this is a 1 to 8.5. This is like a 1 to 4. Let's call this the 8.5 and 4.5. All right, so that's 13%. So if we divide that by 2, because we're half risk each, 13 divided by 2 is 6.5. So instead of having a 1 to 4.5 here, now we have an average of a 1 to 6.5. All right, so that's how we can increase our risk to reward a little bit. And even so, even if price does come back down and sweep this low here, but we still maintain our structure and we go long, well, 4.5 divided by 2, because we're using half risk, is 2.25. And then we have to minus 0.5% here. So we're making a little under 2% on that trade, if that's what happens. But it's still not a bad trade. I mean, you're still netting profit at the end of the day, right? And this is the most highly probable, because if you had to say within an uptrend, what's the probability that price would push lower than the previous swing point in an uptrend? It's lower than the probability of us going long from the demand, right? So that's why I'm okay with taking that type of risk there. So that's AJ, and we're going to be talking about a couple of yen pairs today, mostly yen pairs, I would say. We have Swiss franc, Japanese yen on the higher time frame. Again, we are still extremely bullish. We're looking for overall continuation, so the upside into 158.45. This is a higher time frame. I'll just show you really quick. This is a higher time frame swing point. So we have a lot of buy side liquidity resting above that level. That is, I think that's the highest point we've ever been. Yep. So from 1979. So I think that's where we're going to be looking to target, is that level. We've been in an uptrend ever since. We've been making higher highs and higher lows. You can see this weekly 50 EMA is supporting price, acting as that dynamic support in this market. So even if we had an overall retracement into our higher time frame zones, the weekly 50 would probably creep up, and we would get that beautiful reaction from it. Just an added confluence when we're looking to can trade with the trend. All right. So from a higher time frame standpoint, what we can see is we have a higher high, we have a higher low, and we currently have a higher high now. Now, obviously, we could just continue, right? But if we started to retrace, that would be our higher high. But where would the range be? The range would be from here to here, right? This is the overall pullback. This is where we broke, failed to generate the lower low, made a higher high. All right. So I'm looking at two levels of demand on the higher time frame. Again, this may not occur for weeks or months in the future, right? But just to kind of let you guys know what I'm looking at from a higher time frame standpoint. Remember how we were creating lower lows and lower highs here, and we then failed to generate the lower low. This little, I wouldn't call it really a trend line, but it's really just to show all this sell side liquidity in here was run by that wick. And then at that point, this is where we sort of broke the counter trend here to the upside. And that's where we started a trend. So these two are our areas of demand. If we have an overall retracement into them, that will be the levels in which I will look to buy from a higher time frame standpoint. But from a lower time frame viewpoint here, we have a high, we have a low, we have a high, we have a low, we have a higher high. So what do we naturally expect? Higher low for a higher high. Where's the range? From this low to this high. Very simple, right? Looking for an overall retracement into our level of demand to look for continuations. So I'll scale into a 1 hour to kind of show you all the fine details here. So we can see that we created this head and shoulders. Head and shoulders, once price broke, everyone looked to sell, right? The break of the neckline, that's what every retail, quote unquote, mentor, guru teaches you. And that's why they always lose in the end, because they're retail. So end up creating more equal lows, had a run on that liquidity, higher high, had an overall retracement, and then pulled back into here. And I think that was Friday's closure, the last week of May. All right. And I thought, okay, well, since that's Friday's low, we'll probably end up running that low before continuing, just probably push deeper into this area of demand. We actually came down and filled the 1 hour time frame in balance very beautifully, swept Friday's low, and then continued long. So the counter trend was here. You can see we had lower low, lower high, lower low, lower high. We failed to generate that lower low. We didn't make a lower low below that low. And then we created a higher high. So at that point, this area of supply will flip to this area of demand. So once we make a higher high, then that's where we're looking to pull back into that demand before continuations to go long. So that's why we have that level drawn out. And that's where we can just kind of zoom out and see the higher time frame. High, low, high, low. So we would like to sweep sell side liquidity. All of this sell side liquidity in here, sweep it, come into that demand and go long again for continuations of the overall trend. All right. Euro AUD. So with Euro AUD, we are still looking for continuation short, just because I just still think we need to come lower before we go long again. Even though we are in a bullish uptrend, we are coming into higher time frame liquidity. If I just go to the daily, you'll see this previous swing high. Right? And we look to take out liquidity in momentum. Right? With momentum, we look to take out a liquidity objective. Right? So I think that this high has been sitting here since 2020. We've kind of created relatively equal highs. We're still in an uptrend. I think that will be the target before potentially going overall short, if it does, right? We're in an uptrend. We have to just naturally expect price to go long, but we'll see. We can see that we are being supported by this daily 50 EMA. So we do have to be careful. Even if we're just looking at this from a daily perspective, we had equal lows here. We had this sell to buy, right? And then we created a low and a high. We ended up sweeping this low. So sweeping sell side liquidity, coming back down into that sponsored move. And now we're starting to just trickle on up again. We're being supported by the daily 50. So we have to be extremely careful if we're looking to sell counter trend. Even though I think that there are lower time frame unmitigated levels of demand, that does not mean that we're going to push down into them. We could easily just continue on up and sweep buy side liquidity as we have a lot of it. So if we're going to be trading the short, I would probably cut risk by a factor of at least 2, if not 4. Right? So use like 0.5% to 1/4% risk. Now, the reason why I have this going short is because there's an unmitigated level of demand right in here. You can see when the equal lows were swept, we had that sell to buy, we had that repricing that we talk about in our courses, and then the continuations to the upside. So that is that unmitigated level of demand around that 1.61 level. And we also have unmitigated levels of demand down in here that when we had the sell to buy, we failed to push down into them. So that's why I think we have a little more room to go to the downside. But again, we can see in here, we had a sharp move, sell to buy. Now, I wouldn't have classified this as a sponsored move for, pullbacks to mitigate, because this never came into anything really. I mean, you could say that it came into something within this daily sell to buy here. That's, I mean, sure, you could say that, but it never really came into anything on a lower time frame. So that's a sort of just a sell So selling volume and buying volume at the same time, right? Not to say that that's not real, right? This could easily be a sponsored move, and then it could be because, well, we're continuing to make higher highs and higher lows. So what are the actual chances of us going short versus going long? It's tough because we have lower time frame levels of demand that I would like price to come into, but we're still extremely bullish on the higher time frame and everything I talked about on that daily time frame as well. But within the counter trend, we have a low, we have a high, and we can see within this trend line, 1, 2, 3 touches of this trend line. We enticed buyers above the trend line. We actually mitigated a level of supply, and then we came lower. We repriced. We went short. So repricing, essentially the counter trend, high, low, failed to make that higher high, lower low. So that buying volume will act as that supply. So we may see a reaction from that level, looking to sweep, buy side liquidity before potentially making one more move to the downside, some sort of 1 drive, 2 drive, 3 drive into higher time frame levels of demand before continuing long. We'll have to see on that one. Again, if you are interested in taking that trade, please use good risk management. We are extremely bullish. This thing could easily just fly, right? But it's not a bad area to take risk. All right. Euro JPY, same sort of deal with all the other yen pairs. We still are extremely bullish on the higher time frame. I think price will definitely come into 153.5. This is our higher time frame level of supply. I don't know why it's been extending all the way over. That's just weird. But anyways, we have higher time frame levels of supply, and here we have imbalance. So I'll just zoom out from this wick in here to really this wick right here is a straight selling volume. Right? There was no buying offered within that region of price. We also have a little mini level of supply up there. So that's why I do think that price will continue long. I mean, even if there wasn't supply, we're making higher highs and higher lows. We're in a bullish uptrend. We're being supported by the weekly 50 EMA, by the daily 50 EMA. We're definitely going long. All right, so sort of higher time frame areas of demand, medium swing time frame areas of demand, and lower time frame. Obviously, this is expansion, pullback, expansion, pullback, expansion, right? Counter trend, low, high, low, high. Failed to make the lower low below this swing low, and that's where we started the uptrend again. So now we're looking at continuing along. So where was the counter trend broken? Well, the counter trend was essentially broken here, and I'm not using a trend line to show exactly where it was broken. You just have to kind of see just the overall trend. So low, high, failed to generate that lower low, higher high. So essentially this would flip from supply to demand. Does everyone understand how I got that? Right? It's just a simple flip of structure, right? If this is a low, this is a high, this is a low, this is a high. This is not a lower low, but this is a higher high. This is our last overall selling volume right there. We can zoom in and see, just lower time frame levels of demand. For instance, like right in here, we have demand right there because the counter trend, when we failed to generate this lower low, it created a counter trend. So we have a low, high, low, high, low, high, low, high, failed to generate the lower low, and that's where we started the uptrend. Right, so that is our last selling volume here. And then we also have, this mini trend, high, low, right? So we have 2 levels of, I guess you can call them medium term swing trend, time frame, whatever you want to call it. And then on a lower time frame, you have another one. So 2 areas of potential demand, really just waiting for overall pullbacks, right? What are we going to get? Are we going to get just a lower time frame continuation? Are we going to get a semi-medium term continuation in which we come into like this overall level of demand here? Or are we going to get an overall pullback for, overall continuations from our higher time frame level of demand here? Because at the end of the day, where's the structure? Well, if this is a high and that's a low, this is a higher high here. So naturally, this becomes the range. So we're looking to buy somewhere within that range. And we don't have to pick and choose. We just find structure, find where price is going. We have room to go to the upside. So we haven't reached that objective yet. So we're likely to continue long. And then we just find our areas of supply and demand and find where price has swept liquidity and look to continue off those levels. So in case price just follows the lower time frame trend here, this would be a level of demand, and I'll show you that in a second. If we have an overall pullback, doesn't mean we've broken structure and we're bearish. just means we're experiencing an overall retracement. We have this just general zone here. And if price continues, then we have our last point of demand in here. And if it continues after that, then at that point, we could easily be bearish, and then the higher time frame would probably flip, right? So scaling in here, what we'll notice is that within the lower time frame, we have this skewed head and shoulders, right? Shoulder, head, shoulder. Ended up faking out of that head and shoulders, right? Retail sells below the neckline of this head and shoulders, and then we end up going long and sweeping their stop loss. So that was really just a manipulative move lower. And within the counter trend, we have a low, we have a high, low, high, failed, higher high. Every time I say failed, meaning it fails to continue with the direction of trend it's going, right? Because if this is a lower low, this is a lower high, this is not a lower low. This is a higher low. So now we have made a higher high. So that, again, will flip from supply to demand. So that's what we're looking for price to come into. We have equal lows. So oftentimes price generates liquidity prior to coming into levels. We need to free up that liquidity in order to trade. There's just, you don't just buy or sell, and that's just how the market works. There needs to be someone on the other side of the market for you to facilitate that transaction, right? If you go to the grocery store and want to buy toilet paper, if there's no toilet paper, you can't buy it because no one's selling it to you, right? You have to have a buyer and you have to have a seller. So that's why liquidity is generated, because if everyone is buying off of this support, when it comes and runs their stop loss, they have to sell back their position to the market. That's how you get out of your buy position, right? It's not just you close your position on your MT4 and you see a loss. That's sort of the beginner's way of looking at it. But from a more advanced standpoint, if you're buying, your stop loss is telling you, it's essentially saying, I want to get out of the market at a worse price in which I bought it from to save me from any additional loss that I think I could incur. So if you're buying, you're selling back your position at a lower price, therefore generating your loss. So when you're selling back your position to the market, now there's a seller, boom, now institutions can then go and buy it because there's a seller. So that's why liquidity is generated prior to these levels. That's how we can build conviction behind our specific areas of interest. That's why I like to see liquidity built up prior to us coming into these levels of interest that we have. Just an added influence. Couple more. GBP Swiss franc. So we've been in this trade since Friday, May 12th. So this was about 2.5, 3 weeks ago. Just turned into a higher time frame swing trade. Why? Because I don't care if you're trading in the 1 minute. If price is just consolidating, you're still in the trade. So everyone's like, well, why are you holding your positions for 2 or 3 weeks at a time? It's because there's no volatility, right? So if price were to come into my zone and fly in one candle, great, I could have been out in an hour. But it's just so happened to consolidate for days and weeks on end. Finally, and now it's starting to make a move. So now I'm in decent profit at the moment, right? So it's nothing to do with my, wanting to be in a trade for 2 or 3 weeks. Just so happened the market was just very slow. So I've already talked about GBP Swiss franc so many times before. I'm not going to really discuss it much here. I'm just going to talk about generally what's going on. Overall, higher time frame, we're bullish, I would say. We came into a sponsored move. A lot of equal lows were swept to the left. We had a huge sell to buy. We came down, we mitigated that level very beautifully. Most important thing is, within sort of this counter trend move, we did not make a lower low. We did not, below this previous swing low. We stopped. We stopped right there. That's where we can see that. Started to accumulate, counter trend in here, low, higher high. So we broke the counter trend structure. And now we had our last selling volume, just generally somewhere in here. So that's what we wanted to pull back into to go long, right? Structure has been flipped. We're not going long. We've accumulated into our higher time frame sponsored candle, and that's why we had the reaction and we broke structure. So that last selling volume will act as that gray area for us to look to go long from demand. But what else do we see in here? This is just where you have to kind of just gain some experience to have that keen eye, right? But right in here, we can see head and shoulders, shoulder, head, shoulder. Everyone's selling below the neckline. Nope, right back to the upside. Retail loses yet again. So counter trend again, low, high, failed to make that lower low, higher high. So now this turns into demand. So that's where we took it again from that level. Again, we built up more liquidity. Everyone's looking to buy upon this support level. Everyone is looking to sell below the breakout of this support. And then both sides lose. Everyone who is buying stops for run. Everyone who is selling below this support with the breakout, they lost. Price ended up going long. So we came back down into our 2 levels of demand in here. I won't go into everything. I've already been over it a few times before. And now we're starting to make a move to the upside. So I think that finally this counter trend is done. I think that since we have broken structure to the upside, we may now start to experience an actual leg to the upside now. So what I'm noticing here is just this area of imbalance. So we can just take a look, lower low, lower high. I don't even know if I would classify this as really clear structure, but at the end of the day, this is our last low before the structure high was taken out. So this is our current range, in my opinion. So since that's our range, if we're looking for price to pull back into discount, right, we have our last sort of selling volume in here, so our area of demand, and we have clear imbalance. This imbalance was formed at 3 a.m. EST. So that's prime London session open, May 30th. So that was yesterday. And then we had our continuation. So looking for, at some point, maybe, some sort of overall retracement for continuations to the upside. So that's what I'm looking for on GBP Swiss franc. Last one for me, NJ, very similar to AJ, looking for longs, right? So this current time, we have broken the counter trend, low, high, failed, higher high. So now we're looking to attack our overall objective at 88.75. It's so important to understand higher time frame and lower time frame objectives. If you don't know where price is going, then probably shouldn't be trading at all, right? Just because we have a buy setup doesn't mean we should just be looking to buy. Why? Because we need to know where price is headed. If price is going to go long, it's going to go long for a specific reason because it needs to meet an objective. If there's no clear objective, well, then it doesn't matter how good your buy setup or sell setup looks. It's just not as highly probable. And trading a game of probabilities, right? Nothing is 100% guaranteed. It's how well we can consistently, not necessarily consistently win, but how few times we can lose, right? That's how we become profitable. Right? It's not how many times we can win. It's about how few times we can lose. And that all comes down to probabilities. The higher the probability you have for a trade, probably the less likely you are to lose. So we're clearly in an uptrend. You can see here on the 4-hour time frame, just like AJ, we had a higher time frame sell side liquidity run. All of these lows were run. Even this low here back from September of last year were run by this wick. And that's where the counter trend was broken. Low, high, low. And that's where we finally got that higher high. We broke the counter trend. So let's take a look at what's going on in here. We have the high. We have an overall pullback. We did not make a lower low below that low. We stopped and made a higher high again. So the structure currently is high, low, high. And now we're looking for an overall pullback for continuations. So the counter trend here, in which we failed to generate the lower low below this low here. We had this overall pullback. And then we sprung to make another higher high. The counter trend is sitting right in here. Low, high, failed to generate the lower low, higher high. That creates that demand, that flip from supply to demand, as indicated with this blue box here. That was supply. We had a reaction from the supply, did not make a lower low, instead made a higher high. So that now becomes demand. And we also had another reaction off of this level of supply in here, pretty much that last swing point before really breaking the structure to the upside to make that higher high. We had a little bit of a reaction. So a little bit of a demand level there as well. And then again, what we like to see is a buildup of liquidity prior to coming down into those 2 levels. So again, one level is going to be here. The other levels are going to be here. And you remember how I talked about how I split those positions up for risk to reward purposes. So you guys should know what I'm talking about there. So we didn't have that immediate mitigation of that level before continuations. It ended up just stopping, creating a high, another low, another higher high, another low, right? So it's building liquidity prior to the mitigation of these levels of demand. These are still unmitigated. So that's why, if price does fall, it's not a break of structure below the previous swing point. It's just an overall retracement, a sell side liquidity run for overall continuations, in my opinion, right? So, many people would look at this like, oh, we failed to come into this level here. We just missed it. Now we're starting to go long. Oh, now I have to buy it because I have FOMO. But for more seasoned traders, you would know that, okay, well, just because we didn't come into it immediately doesn't mean we're not going to at all. It just means we need to be a little more patient and wait for price to get back down into that level, because now this could act as sell side liquidity. So what price could have done was made this high. We could have come back down, swept that low into these levels of demand, then going long. So when everyone had FOMO and they're buying somewhere here, we're patient and waiting to buy here. And we didn't have that immediately. We actually did not. We made a high and we made a low and then we made another higher high again. But still, you have to be patient, because within this current structure, I didn't really see anything of interest to buy it. I really didn't, just because we had these unmitigated levels and there wasn't anything very clear to me. So I didn't take the lower time frame continuation setup just because there wasn't anything. Now, if we did something like this, if we created liquidity in here and we had a sell to buy and we had like that sponsored candle in here, well, would I have taken that buy setup from that level? Yeah, probably, because it made sense, because we could easily just continue with the trend here. We could have, even in here within this overall price action, we could have just continued. So I would have taken that risk, and if it went long, great. If it didn't and came back down, fine. But just continue to trade with the trend until it breaks, but then buy it from our overall levels anyways. But it's always about having patience, right? So I didn't see anything, so I'm not going to be buying. I'm waiting for price to have that overall pullback. If it does, great, we can buy it. If it doesn't, move on to the next setup, right? It's just because you see a setup that you want to trade so badly doesn't mean you're always going to get it. Okay. So looking for those levels, have a little bit more room to go to the downside before going long. AJ is sort of already into that level already, or at least our first level. So if we are to experience a further push on NJ, we might experience that on AJ as well. This is why we just have, our lower time frame levels of demand below sell side liquidity. So looking for that sell to buy. Or if we have that overall retracement, just like we talked about, we could come down into that last point of demand that created this structure in here, right? So there's looking for a few things, but again, everything has been so slow, so choppy. We haven't moved across the board. I mean, that is just clearly evident that we have not had much volatility lately. So therefore, there's just not going to be as many setups, and there's really nothing we can do about it. So I'm going to stop sharing. I'll have Aiden go over any pairs that he wants to discuss. And then we will.
I have absolutely nothing on my beloved majors, guys, unfortunately. I do have, or what I am looking at is some of the exotics, which Nate has already covered. So I guess we can open it up for some questions, and potentially end this one earlier than usual, just given the fact that markets are dead.
Yep. All right. Any questions, guys? Feel free to spit some out at us. We'll stay on for a little while, answer any questions. If not,
in there.
We'll head out soon.
Don't force trade simply for the sake of being in a trade, guys.
Yep.
Market's not giving you anything, just step away. It's kind of been the theme, right? But like I said at the beginning of this session, we've had a slow kind of first half of this year, but could very easily have a very volatile close to the year. So it could very easily make up for lack of activity very quickly. Quiet crowd too. I am kind of looking at CAD Swiss franc. You didn't cover this one, Nate. I didn't miss that. I hope. Right?
Yeah, we're good.
I think I talked about this one last week as well. And we were like trading in here somewhere, and we're still trading in here. But this one is obviously that, overall we've been trading down for quite some time. But we have now had what I'm looking at as a potential break of lower time frame structure, right? With creating this wick low, the lower high, the lower low, and then the break, right? And so just given the fact that, well, first and foremost, right, this expansionary move, create the initial high, the initial low, and a new high. And oftentimes what we like to see is a run on that initial low, right? That kind of continuation pattern that happens after an expansion. We like to see that run out, right, while price simultaneously discounts itself and trades into the true POI. And so I still think that is potentially on the cards, right? I would like to see a reaction. We are seeing somewhat of a skewed kind of head and shoulders, I think, at the moment. So if we can see that run on the neckline or run on this initial low here, I'm looking at 6,580 into kind of 6,550 as that discounted buy zone to look to get net long again, potentially for an A into B into C type of retracement. All right. And I do like the fact that after the expansion, right, this is a very slow and choppy price action here. I'm viewing as somewhat corrective in nature, right, which is also a good sign that we will get that kind of sell to buy price action we like to see, the higher low and the higher high. All right, so I just wanted to point that one out. See if we have any questions.
NZD Chef. I don't really see anything on NChef. Just dying right now. Price is just continuing to fall. No setup on that at the moment. Would it be possible to refresh the concepts of valid and invalid S&D zones in the crash course? I'm not really sure what you mean by that. I don't think there's any need to refresh anything. Everything is, S&D is S&D. Nothing changes just because the market is changing a little bit. The concepts are still the same. So just because volatility is low, just because, and this is where psychology comes into it, right? And again, this is where a lot of people go wrong when it comes down to courses, is they take a course, and when it doesn't play out every single time for them on the charts, they immediately think, oh, well, this course doesn't work. This stuff doesn't work. No, it has nothing to do with that. It just has everything to do with the experience. And same thing, when it comes down to psychology, is that when the markets start to change, then everyone thinks, oh, well, there needs to be some sort of update when it comes to these concepts. Like, how am I going to go about trading it now? Like, wow, what's the best way of trading it now? And that's because, it's the same thing with like losing or winning trades, right? If you're looking to add in an additional confluence, and you see that confluence and the trade doesn't work for you, you immediately think that confluence, you shouldn't have that confluence anymore. But then if it does work for you, you think that it should work every time. So it's all a game of psychology. So to answer the question, there's nothing to refresh. Everything talked about in the crash course is still valid, and it will forever be valid, because that's how the markets truly work. All right, guys, any last minute questions before we hop off? I know I said I would do a Saturday live session. I'm still contemplating on whether I want to continue doing them. Just because I feel like a lot of people are on it just to see the trade ideas for signal purposes. I don't feel like people are really interested in learning. Numbers are starting to go down, so would rather not waste 2 hours of my Saturday doing that. We'll have to see. I just don't know if we're going to continue with these lives. We'll have to kind of figure it out, but CADJ, pretty much everything we discussed are the only things that we see that's really interesting to talk about. I don't really see anything on CADJ, so I wouldn't be able to give you any value with that, so no point of going over that.
Yeah, CADJ bullish up until 104.50. So when we do have some volatility and get a retracement, I'd be looking for continuations. We're not at discount at the moment. I'm buying retracements on CADJ. I believe I talked about CADJ on last Wednesday's live session. So if you want to go back and watch the recording on that one, I did break that one down heading up into the monthly up close candle. And people will come back when volatility does. Yeah, I mean, I get it, right? If there's no volatility, there's no trade setups, right? And you're not meeting your full trading plan, then what's the point in just staring at charts? Right, go enjoy your day. Go do something else. Go lift weights.
Yep.
Read a book. It's just the way it goes. Been doing this for 6 years now. Seen it plenty of times.
Appreciate it, Barry. Thanks for the nice words there. In terms of, says, I know the concepts book. I didn't mean that there are new concepts. Just wanted to talk about them again. I mean, it's very difficult for me to just discuss very broad, invalid versus valid S&D zones here within the next 10 minutes. It really would take. I mean, I would just review the crash course again. Everything you need to know is in there. Just keep watching.
If you want to book a one-on-one, since you're a
Private member, feel free to do that, and then we can hash it out.
Mm-hmm. You can do that too. Strategy to start with. Started with retail, figured out that it's bullshit. Then ended up with smart money. Been doing it for 4 years now. We doing any Bible study sessions? Yeah, we've been so busy lately. I know that's not really an excuse, but it's tough when so many things going on. I'll definitely hold more. I'm just trying to figure out when the best time to do it. Maybe not this Sunday, but next Sunday we'll see. I'll try to make it a point to sit down and prepare for that. It's just been a really hectic last few weeks with us because a lot of things going on, and
we're building things out for you guys in the back end, guys. So bear with us, or, you know, things like putting together our own prop firm, big projects that can make a big difference. So bear with us.
How many pairs do I trade per day? Well, I have my set of pairs that I trade, but the question shouldn't be how many do I trade per day. I only trade when the market gives me setups to trade. So there's no answer to that question, to be honest.
Thanks, Chad. Appreciate it, man.
All right, guys. Well, enjoy the rest of your day. I guess we'll plan on doing a Saturday live session. I'll make an announcement if I'm not. I just don't think there's a point, and if the markets are just not moving, I mean, I wouldn't really be going over anything new. And then we'll probably potentially come back sometime in July. We're going to take a month off as we usually do. We'll see what kind of interest we have in that going forward. If there's interest, then I might continue. If there's not, then we'll move on. But appreciate your time today. We will keep up with you guys, those of you who are VIP. I know there hasn't been a lot to discuss, but of course we're still doing our due diligence on the charts. And if there's anything, we'll of course let you know. But until then, have a good rest of your day. We'll talk to you later.
Absolutely. Take care, guys.
Take
Cheers.
care.